Let me share something with you. As someone who watches the markets closely, this is one of the biggest shifts I've seen in a long time. It's a move by the US government that's about to completely redraw the map for the global tech supply chain.
Just try to picture this for a second. We're talking about a market so huge that if you get locked out, your whole global strategy could just fall apart. And that's not just some made-up number. That $850 billion, well, that's roughly what the US government spends buying things every single year. And that massive pile of cash is right at the heart of what we're talking about today. Okay, before we jump in, just a quick heads up. Today's date is March 5th, 2026. And you know the drill, this is all just for your information. It's definitely not financial advice. So please make sure you do your own homework before making any moves.
So here's how we're going to break this down. First, we'll look at what this ban actually is. Then we'll get into the timing. Why now? After that, we'll see who really gets a leg up from all this. And finally, we'll talk about how we, as investors, can think about this whole situation. All right. First things first, what is this new rule? Because this isn't some small adjustment. We're talking about a major change in how the US government shops for technology. The official, kind of clunky name for it is the FAR Proposed Amendment. But here's what it boils down to. The group that makes the rules for federal buying wants to flat out ban government agencies from purchasing anything that has chips from certain Chinese companies inside.
And they're being incredibly specific. This isn't a broad swipe. It names names like China's #1 chip foundry, SMIC, and their big memory players, YMTC and CXMT. And the impact? It's huge. It covers pretty much any electronic gadget you can think of, from the servers in a data center all the way down to phones and TVs. Now, this isn't flipping a switch overnight. There's a clear plan. The public has until this April to weigh in. The ban itself is scheduled to start right at the end of 2027. That gives companies a couple of years to go through their entire supply chain, find these chips, and get them out.
So that leads to the really big question, right? Why is this happening now? What's the trigger for a move this big? And to get that, you really have to look at what's been going on in the market for the last couple of years. It all really kicked off with the AI boom. Demand for computing power just went through the roof. And with it, the price of memory chips. We're talking the absolute fundamentals here, DRAM and NAND. Their prices more than doubled. So if you're a company like Dell or HP, and the cost of one of your most essential parts doubles, you've got a problem. You have to protect your profits. So what did they do? They started looking seriously at cheaper chips from Chinese suppliers. It just made business sense. And it wasn't just the PC guys. I mean, this report right here is what really tells the story. Even Apple was reportedly kicking the tires on Chinese memory. The idea was to use it as leverage to get better prices from their usual suppliers. That shows you just how big this trend was becoming. So with that context, this ban starts to look like a very clear warning shot from the government. It's sending a message loud and clear to anyone who wants to do business with them. If you use these particular Chinese chips to save a buck, you're risking that entire government contract. So you start to connect the dots. This rule creates a massive problem for some companies, but for others, it's a huge protected opportunity. Which brings us to the ones who stand to gain the most from this. You have to look at it from China's perspective. Their game plan was simple. Use the AI boom to stack cash, grow their production to a massive scale to bring down costs, and then go after the market leaders. Well, this ban hits that plan right where it hurts. It cuts them off from a major market, which makes it way harder to get the scale they need to compete on the world stage. And that's where the advantage becomes so clear. This whole policy is basically a protective shield for South Korea's giants, Samsung and SK Hynix. It protects their market share, and this part is so important, it gives them breathing room. It gives them time to pull even further ahead in the high-end stuff like HBM without having to fight a price war with Chinese companies. Okay, so let's bring this home. What does this all mean for us as investors? If we see this shift happening, how could we get exposure to the companies that are set up to win? Well, for most of us in the US, the easiest way is probably through ETFs. Think about it. Samsung and SK Hynix are so dominant in South Korea's economy that funds like EWY or FLKR have a massive chunk. We're talking 40–45% invested in just those two companies. It's a very direct way to play it. Now, if you want to own the individual stocks, you can do that too. You can buy them over the counter here, or you can use an international broker to trade directly on the Korean stock exchange. Just be aware, those routes are a bit more complex. You've got things like lower trading volume and currency exchange to think about.
So, when you pull it all together, here's the bottom line. This 2027 ban is forcing a massive de-risking of the supply chain. It's a deliberate choice to shift where the US government and all the companies that sell to it get their most important technology.
Which really leaves us with one final thought. American tech companies are about to face a huge compliance headache. So you have to ask yourself, has this one political move just handed South Korea's chipmakers a multi-year head start with almost no competition in sight? It's a powerful question to think about.